Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 3rd of October. So I've seen plenty of action again this week in a non-farm payroll week, which is certainly not like any other that we've seen with government shutdowns looming, but we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the dollar index, and we can see that it's playing the game in terms of the pattern that we want it to actually form in terms of the lightning bolt. So we can see that we've had the higher high and higher low sequence now, and it has pulled back to the level that we really wanted it to, because ideally in a perfect world, we don't want to see it just go straight up in the air, because that's not really sustainable long term. So what we wanted to see was that pullback, which we got this week, all the way back to a level of very strong support. So we can see that we've had really good strong support right through this area at around that sort of 97.60-ish zone. And look, even in today's session, it did attempt to get above the 98, failed to do so, failed to close there, but it has certainly attempted to do it, and that's the important thing, because all we need to do now is see a momentum shift on the smaller time frames to push up, and then we'd be looking for the previous high here at around that 98.50. If you go to the smaller time frames, what you're really looking for is a series of higher highs and higher lows on a 1 hour chart, similar to what we see on the downside here, but of course in reverse. And the minute we get that, like if we see a bounce off this 20 moving average here and we see a new high formed at around that sort of 98, 20-ish area, we're going to have a lightning bolt on the smaller time frame, which is going to signal a good opportunity to potentially go long in terms of the pattern that we're looking for. And ideally, we want to see a good break above that 98.80, because once this is off and running, it should really give us some really good opportunities to get in, shorting the euro in particular, but also testing the top boundaries that we can see have been in place for a little while as well, around that sort of 98.80. If that gets broken, it really opens up this whole zone here. So far playing the game, but again, a little bit more work to do in terms of actually getting above. We've reached the support. Now we want to see the lower, the high low sequence after these. And then we're looking at that lightning bolt pattern to play out for us, which means, of course, short on the euro if that pans out here. Right, we'll go over to the S&P 500, the juggernaut that just will not stop. The US markets are effectively defying gravity at the moment. They're just basically shooting up. It doesn't matter, bad news, government shutdowns, it makes no difference. Everything is fine according to the US economy. And again, it made an all-time high. This week has basically crept up slowly, as we generally see in a non-farm payroll week. So not a hell of a lot of action, but if you go to the smaller time frames, you can see that the opportunities all week have been there. If you go right through the whole week from the bases, you can see all the higher highs and higher lows that are formed on the 1 hour. If you go to the 15-minute chart, of course, which is the day trading ideal time frame, you're going to see the same thing. You have to go back a bit, obviously, because it's over the week, but you can see that effectively once it got cracking, basically up, higher high, higher lows all the way through, and then it levels out for a little bit. A little bit of a pullback, and then off it goes again. So you can see that the day trading was pretty good this week, but again, it's a little bit difficult to trade a market that is gradually going higher with not a lot of substance behind it. It makes it very difficult to trade. In my mind, you're probably better off doing a little bit of watching and seeing at around these levels. Like I've said before, we're not really, it's not ideal to be trading into all-time highs, especially in a market that probably should be more volatile than it is, given the information that's being released, really. So I would be very, very cautious around the S&P 500 and all of the US indices for that matter, because they could potentially turn on a dime. And if they do that, quite often you'll see a pretty reasonable pullback that doesn't actually support good stop loss level zones. So you don't really get caught up in that. It's a bit of a wash and see. Let's see if it pulls back a little bit and gives us a good opportunity to actually enter at a better level. One of these levels, like I said previously, we want to see a bit of a pullback to give us an opportunity to actually get in and have a little bit of confidence in that indice. All right, we'll have a look at gold. Gold's had another massive week. You can see, obviously, on a day perspective, we bounced out of this sideways action here, and off it went again. A very, very, very big day here on the Monday, and it continued on. Look, it's a couple of doji candles. We had a shooting star yesterday, and today we've got a massive doji, a pretty reasonable range doji as well. We've got a 38.20 as a low, and nearly 3,900 as the high. It's a pretty decent range for gold to be finding itself at the middle zone where it opened and closed effectively, which is what it's trying to do. Look, it's had a phenomenal run. It's all but reached 3,900. There's nothing to say that it won't keep going, but you always start to get a little bit nervous when you see two rejection candles in a row, especially in market uncertainty. Look, just because even if we expect the market in the US to come off a little bit, which is probably the expected move, it doesn't mean that gold's going to come off with it. In fact, it might actually give it a booster and rise on the end. So I would never trade against a trend that is so strong here, even though it is at all-time highs. But at the same time, I'm not going to be the first person taking a ticket at the all-time high. So really, what we want to see is a bit of a pullback to a nice level, and that could be even 3,800. That would be more than adequate, and then I'd be looking for the previous highs as the target zone. So I'd be certainly scalping, still in scalping mode, no question about that. I wouldn't be looking for anything too long term because, like I said, the market, despite what it looks like, is actually quite volatile at the moment given the economic data and news that is coming out. But what you want to be doing is ideally looking for the easy trade. So if it pulls back to around this level here, even 37.50, that'd be a fantastic pullback actually, especially if the 20 moving average catches up. We're looking for a rounding bottom at that point, and then we see a series of higher highs and higher lows on a smaller time frame, and we're looking at going along to the previous high and close enough to 3,900. So that would be the idea on gold, but really strong and good trading again this week. Some really good opportunities there. All right, we'll move over to oil now. Look, oil has been one of those ones that finally broke through a barrier that has been in play for a long time. We had the beautiful evening star here early in the week, or late last week, early this week, and it's done nothing but sell ever since. It broke through a zone that had been almost impossible to crack over recent months, and it certainly did it now. And you can see that we're already in the 60s. We were targeting 60 as the profit target if that did actually break past the 62.50. Now, I mean, it's already nearly reached it, so hopefully you're able to get involved in that. If you went to even the 1 hour charts, it's probably a little bit aggressive, but you can see here that once it broke that 62.50, it sold. I mean, it sold off fairly quickly, but it did give us an opportunity. It did come back here, hit the 20 moving average, and down it came on the 1 hour. But it has systematically been selling off all the way from the high. So, and even from the 15-minute chart, if you go all the way down to the scalping time frame, you're going to see lots of opportunities on the way up and on the way down as well. You can see the higher lows on the way up, and the lower lows all the way down as well. So it gave us really good opportunities to get in. It's been one of those ones where it's been a day, trading and even a scalping sort of heaven over the last few weeks, because it's been basically bouncing between the two important zones of 62 and 65, sort of 80. It's done that really well. The evening star gave the pattern away that we were really red hot for a move back down to 62, which was the initial move. I know a lot of people caught that, so that was really good. But now that we've seen that break, a lot of the meat's already gone in the trade. And if you're in the trade at that time and you followed it through, it's fast coming up to your profit level. Really, it's a really good trade. So hopefully you're able to get involved in some of that. I think next stop is probably around this sort of 60 flat. So that's what we're really aiming for now. And I wouldn't be really, even if it pulls back up to the 62.50, that might still be a sign that it's going to turn around. So I'd be following the small time momentum on this one to really give you the guide as to where it's going to go. But 60 is the likely target. All right, and we'll have a look at Bitcoin as well. Look, a very quick look at Bitcoin. Very large move. The giveaway was around this level here. We talked about it last week, that if it did bounce through and past the moving averages, it was good, especially if it went past the 114.5 to 115 level. It did that with flying colors, and now straight up to basically the target, really, which is around the 120.300. It did that really quickly and really easily. So now that it's actually broken through so many key levels, if it does maintain its levels above that 120, there's a very strong possibility that it's going to see an all-time high and potentially the next move up. So it's done all the right things for us. I know a lot of people got into this one as well at the right time, which is great. It pulled back just enough, and it's given plenty of opportunities to get in as well. If you go to the smaller time frames, again, the 1 hour and the 15 are key here. Pullbacks to the 20, off it goes. And again, even on the 15-minute chart, if you want to go to the smaller time frames, effectively all the way up, you can see pullbacks to the 20 moving average, all opportunities to get in on a long-term trend. So although it looks like a really big candle on a daily, if you go to the smaller time frames, you can see there are many opportunities to actually join that very powerful trend. So very important to follow the technicals when we see moves like that. So I hope you've had a great week's trading. Look, there's obviously a little bit of uncertainty with government shutdowns at the moment and non-farm payroll, so just trade carefully over the next little bit, because there's still a lot of volatility in the markets, but hopefully you're able to extricate some points and pips this week, because we did see some good moves, and we'll see what the market gives us next week. Have a great weekend, everyone.